Hello and welcome to the Delaware Mortgage Rate Weekly Update for the week of December 12th. I'm John Thomas with Primary Residential Mortgage. Okay, today in the news we have, jobless claims came in last week at 381,000, which was lower than expected, and consumer sentiment reached a 6-month high. So all that is good news for the economy, so the stock market's been rallying, which typically would be bad news for the rates. But the rates have actually held pretty good at historic lows. We'll talk about that. But first off, graph of consumer sentiment. You can see that we are now at a 6-month high for that, which is good. That's the consumer's outlook on the economy. Now, why have the mortgage bonds held and rates have held near historic lows? Because of Europe. The Eurozone's issues are causing much uncertainty in the market, so a lot of people are staying in the bonds. So the European Union had a summit last week. They kept their interest rates low and they came up with a plan to come up with budgets. But the S&P put 15 of the 17 countries on notice they may get a credit downgrade. So all that stuff could play out badly, which could also help mortgage rates. Reports to watch this week. We have inflation coming out. That's the producer price index and the consumer price index. Inflation's been tame. Federal Reserve says it should remain tame, but if that comes out high, showing some inflation, that's bad news for the bond market, so we could see rates move higher on that. The other big news mover this week is the Federal Reserve is meeting on Tuesday, so what they discuss could also have an impact on the market. If they do mention QE3, quantitative easing round 3, that could actually help home loan rates. They should keep the interest rates low. No one's anticipating them raising that. In other news, so you can see the bond market. If you look at the bond, the higher the bond goes, the lower the rates. So you can see we've been doing very well. The arrow is showing that we've been trading higher, which is great for interest rates. Now, in the news, FHA decided to raise the loan limits back up to where they were. They dropped October 1st, so they raised them back up to where they've been since 2008. So in Delaware, Newcastle County, they're back to a loan limit of $420,000 for a 1 unit. In Kent County, they're back to $376,250, so $376,250 for the maximum loan amount. And Sussex County is $375,000, so some good news there. The other piece of good news is HARP 2.0 program. That's the homeowner affordability refinance loans that have been around. They revamped those. Now, they won't actually be able to get them until March, but you want to call us now to get an analysis done so we're ready to go when March comes. It's going to take March for them to roll out all the stuff for us to be able to do it. But you want to check now. Some of the guidelines are they're removing the LTV restrictions. So if you couldn't qualify because you were too far underwater, the restriction before was 105% up to 125% depending on the lender, but no one could go over 125% loan to value. They've removed that completely now. And previously, if you had mortgage insurance, you were not able to refinance. Supposedly, you're going to be able to do that as long as the mortgage insurance companies get on board. But if you had lender-paid mortgage insurance, that is still a no-no. You will not be able to do anything there. Remember, a free first-time homebuyer seminar is this Saturday, December 17th. You can register online, DelawareHomebuyerSeminar.com. There's 2 sessions, 10 a.m. to noon, 1 to 3. Hopefully we'll see you there. If you have any questions, feel free to call me in the office, 302-703-0727. And if you need help getting a home loan for the purchase or refinance of a home in Delaware, give me a call. Again, it's John Thomas, Primary Residential Mortgage, and until next week.